I'm joined now by the President and CEO of Trobe, Greg O'Neill. Greg, thanks for joining us. Can you first of all tell us a little bit about Trobe Financial?
Good to be here, James. Thanks very much. We started our Australian operations in 1952. We're a credit specialist funds manager operating in Asia Pacific. We've had $10 billion of funds under management on behalf of retail and institutional investors, and we operate through 3 principal offices in Sydney, Shanghai and Melbourne.
My second question is, what trends or themes are you seeing important to your current investment approach?
Our investment approach is a very disciplined approach, as you would expect. And essentially, investors are telling us 2 themes are important to them at the moment. The first one is the hunt for yield. With global interest rates being very, very low, investors are looking for a better rate of return on their current investments, whether it be dividends or just income yields. The second theme that we're finding, James, is that investors are very much looking for less complexity in their investment assets. And that means essentially finding areas of lower volatility around the world and more stable growth. I think investors are highly prizing capital preservation over the next 2 to 3 years.
How does Trobe Financial cope with the downside risk in the global economy?
One of the hardest things to do as an investor on behalf of others is actually to protect capital loss and also to make sure you choose the right assets. And a very important rampart in that line of defence has always been and will always be diversification. So that's key for us, has been for many players, and it's been proven over a great many number of years to work. For us, that means choosing economies where, as I said earlier, the growth rate is strong and volatility is lower. So for us at Trobe Financial, we think Asia and Australia particularly, and Australasia broadly, is a very important part of global investments.
Now, we've heard certain things, but is there a housing bubble in Australia?
Our view on balance is no, but let me add some colour to that for you. Australia has a residential housing market approximately of 1.4 trillion Australian dollars. So it's a substantial market in its own right. Our population, notwithstanding our land mass, is only 23.5 million people, and we're growing our population base by roughly 400,000 new citizens a year. That includes net migration of about 320,000 and natural births of about 100,000. Now, when you know those numbers and then you look at the number of new dwellings that we're only building in the order of 180,000 to 200,000 new homes each year against new population of 400,000. So we have what's typically referred to as a structural long-term housing stock shortage. And that's different from a housing bubble. It leads to the same outcome, which is higher prices, and regrettably, like here in the UK and in many parts of the world now, a great portion of the younger population who are first home buyers are finding it increasingly difficult to get their foot on the first step of the ladder of home ownership. But it's certainly not a housing bubble.
Apart from Australia, you have a significant presence in China. What made you choose China over other markets like the United States or even the United Kingdom?
Well, Australia is a long way away for many people. It didn't get the nomenclature of being down under for any reason. But our geography is shared in the region with China. We share a very similar time zone. And just the sheer size of the market, the population and the growth in the economy warranted our engagement. We think that China is a very significant part of the future of Australia's success, both economically and socially. And for us, it was a very natural fit. We have something in the order of 12 to 18% of the Australian population now claim that they speak Mandarin as their first language. We have 111,000 mainland Chinese students studying in our universities. And many of them, once they return home, will, of course, in years to come, start to trade and do business with Australia. So for us, it's a very natural fit.
How different is the market in China when compared to Australia?
Well, what we can tell you from our experience is that it's not just one market, and this is a trap for new players going into China. It's essentially probably 14 different markets. And I think many Westerners, when they go into China, it takes a good number of years to acclimatise to those differences. We've been there now for over a decade, and we know that notwithstanding all those differences, and there are many differences, the overwhelming thing that we notice, James, are the similarities. Those similarities are things such as the Chinese are a very hard-working people, they're highly intelligent, and they love their family. And they work very well with Australians. I think that fit has been proven over the last decade with our operations there. Certainly our other thoughts are that any economic business that you do with them outweighs any differences whatsoever. So they're driven by the same things you and we are here in the UK or in Australia, in Europe or America. And that is very human traits of wanting to build successful businesses, wanting to put their children through better schools, wanting to buy a better home or a better car, and these are very understandable human traits.
Yeah. So if I can just ask then, where have you seen more growth? Is it actually in China or in your home market of Australia?
Well, our experience is very telling. Our funds management business in Australia, which is a leading retail mortgage fund in Australia, we've had compound annual growth of roughly 20% over the last 5 years in our funds management business. And that by any measure would be success in of itself. We're very proud of that. But by comparison, over the same 5-year period, our compound average growth rate in China has been anywhere between 80 and 100%. And that depends on the investment settings that we're allowing from time to time, because you can have so much inflows, but you've got to balance that with quality assets. You don't want to be overrun by liquidity. And really, I think that's a telling story about China in its own right.
Looking at it from another point of view, what has been the impact of China's debt crisis and the slowing of economic growth on your business?
Well, firstly, I think as China moves from an agrarian economy to an industrial economy, which is where they're transitioning now, and in the next decade or 15 years where they move from an industrial economy to a technological-based economy, there will be periods of moderation of their growth. The central government in Beijing accept that as a natural maturation of the economy. So there will be breathing periods. So the current downturn, and there is a slight downturn again at the moment, its principal impact on Australia is in 3 areas. The first one is the prices that we receive as a country for some of our mineral exports, mainly coal and iron ore, to name a few. But to put that into perspective, James, we've got to remember that the mining industry in Australia is anywhere between 15 and 18% of the country's GDP. It's not the whole economy. We're not just a quarry, we do actually produce other things, which is a good thing for our country. Secondly, it creates a lot of downward pressure on the Australian dollar, which is also healthy for our exporters, our farmers and our other exporters. But overridingly, from our special vantage point of being a funds management business, it's had to date very little impact on fund flows, as I said.
Now, we've discussed China a lot and we've discussed your home country of Australia, but is there another country that you would like to be present in, and if so, why?
Well, as we expand slowly our international footprint, we have put our toe into China. We only have one office in Shanghai. There's a lot more to do there. I think you'll find it will expand slowly into other Asian countries as well, such as Malaysia and Singapore. They're very well-known markets to us, and again, time zone geography. We're here researching in London at the moment counterparties with a view to having a limited product offering in the UK mid-next year at this time. But I think our overriding focus will be one of serving with distinction our existing retail and institutional investors, and we're remaining very focused on doing that job well.
So then, so it's best to concentrate on what you do best and then gradually expand without overstretching.
I think the success story is about, for any business, sticking to your knitting. You can't be all things to all people, and we take the view that investing is not like Olympic diving. You don't get extra points for degree of difficulty. So it's an approach of keep it simple.
Greg O'Neill, President of Trobe Financial, thank you very much indeed for joining us.
Thank you so much.
Pleasure.
Thank you.